Well, according to my watch, we're right at the top of the hour, so we'll go ahead and get things kicked off. Hello, all. Welcome, and thank you for joining the latest installment of our Harvesting Value webinar series. Today's conversation is designed for young, beginning, and small-scale farmers looking to build a stronger financial foundation in agriculture. I don't want to give too much away, but I'm confident that our time together will provide both practical, additional tools, and support for your financial journey. My name is Jacob DeBoer. I'm part of the marketing team here at American Ag Credit, and I'm based out of the great Central Valley of California, as I like to call it. Before we dive into our presentation, I'd like to remind everyone of a few housekeeping items. You're welcome to submit questions to our speaker at any time during the presentation via the Q&A feature at the bottom of your Zoom taskbar. We'll do our best to address as many questions as possible at the end of the webinar, and we will follow up on all questions that we don't have time to address following the webinar today. If we have not had time to work together at American Ag Credit, American Ag Credit is part of the Farm Credit System, an agricultural lender that supports America's farmers and ranchers with reliable credit. Our sole mission is to improve the lives of our fellow Americans by sustainably supporting agriculture so Americans can have access to safe and nutritious food supply. Our teams focus exclusively on agriculture. Many of our employees, like myself, actually work on farms and ranches or grew up on a farm or a ranch. From small to large operations, we understand the industry and how to structure loan solutions to help our customers achieve their goals, protect their legacies, and grow the industry's next generation. Really what we're talking about today. Today, our presentation is led by Nicolette Dubois and Jason Runyon. Nicolette is a relationship manager based out of Stockton, California, just up the road from where I am today, with 8 years of experience in credit, underwriting, and lending at American Ag Credit. Jason is our missions program manager for American Ag Credit, where he advocates for the cooperative's Young, Beginning, and Small Farmer program. Jason grew up on his family's cow-calf operation in eastern New Mexico and currently runs a small cow-calf herd with his wife and children in northeast Texas. So thanks for joining us today, Nicolette and Jason. And Nicolette, I'll let you go ahead and get started.
Awesome. Thanks, Jacob. And thank you all so much for joining us today. I'm excited to talk with you about some fundamentals of finance for young, beginning, and small farmers, or YBS, as we say. So throughout my time here at American Ag Credit, I've really enjoyed, any chance I've gotten to work with YBS customers. You really are the future of agriculture, and let's be honest, you're facing a pretty unique set of challenges this day and age, and it's not easy. But that's exactly, why we're here. Supporting YBS farmers is a core part of our mission. And we're committed to partnering with you, educating where we can, and helping you build something sustainable. So with this first slide here, I assume most of you are familiar with American Ag Credit, whether you're a current customer of ours or not. But just a little background. So we are a part of the Farm Credit System, which was created way back in 1916. At the time, city banks didn't want to touch ag loans. They saw them as too risky, and then rural banks didn't have the capital to lend. So the Farm Credit System was born to make sure that farmers always had access to affordable, reliable financing. And today there are 55 associations across the country, American Ag Credit being just one of those 55. So if we head to the next slide, you can see that we're actually the fourth largest association in the system out of those 55. Each association serves a specific territory, and this map shows ours highlighted in green here. So you can imagine, with such a geographically diverse footprint, we naturally see a really wide range of commodities. And that diversity is really a strength of ours. It helps us weather market ups and downs in any particular crop, and really stick with our customers through tough times. So that's American Ag Credit in a quick nutshell. But before we dive into our main topics for today, let's take a quick look at what actually happens when you apply for financing with a lending institution such as American Ag Credit. So whether you're buying land or investing in equipment, lenders are going to look at a few key things to understand your business, and that brings us to the 5 C's of credit. So if you've taken any sort of finance class in the past, you've probably heard of this. It's essentially a framework that we use to evaluate loan requests and get kind of a sense of the overall health and viability of your farm. And all of these C's are interconnected. So for example, you can't just have collateral to offer without the capacity to repay the loan. And you can't just have, strong cash flow or strong capacity if your balance sheet or your capital position is upside down. So it all works together harmoniously. And this slide kind of shows a quick breakdown of the C's. So I'll just touch on a few here. Character, of course, is pretty straightforward. It's about your reputation, your integrity, and your track record for repaying debt. Have you historically done what you said you do? Capital, think of this as your balance sheet. So, how liquid is your operation? How much equity do you have? Are you contributing your own capital to support the project? And then capacity, this is your ability to repay the loan. So we know that, money goes out to raise the crop or livestock. Money comes in when you sell. What's left over to cover taxes, bills, and loan payments. So a lot of this information just here in these first 3 C's can be revealed through a few key pieces of documentation that we'll be discussing today. And if we head to the next slide, we'll see that those are your business plan, your budget, and your balance sheet. So we're gonna do a quick pause here and get a pulse from the group. I'm very curious, how many of you on the call have put together a business plan for your operation? You should see a little survey pop up on your screen. So go ahead and respond when it shows up. And while those results are trickling in, we'll continue on to the next slide and talk about basically why should you even care about all of this financial stuff. So, sure, it helps when applying for financing, but beyond that, like why does it truly matter? And I think a lot of folks, feel that they can just kind of farm and figure out the numbers as they go. And, we get it. You're busy, you're hands-on. And sometimes it feels like the paperwork can wait. But the truth is, farming is a business. And like any business, having a plan and knowing your numbers can really make the difference between just surviving and thriving. So each financial statement that we'll talk about today kind of serves a different purpose. But together, they'll give you a full picture of your operation, how it's performing, where it's headed, and then whether it's ready for financing if and when you need it. Okay, so let's see what our poll results were. Okay, so it looks like, it's somewhat even, mostly no's, which, you're definitely not alone there. These results are, not too surprising to me. While a bank, including American Ag Credit, might not always ask for a business plan when we're collecting like your standard loan application items like taxes, balance sheets. If you're a YBS farmer, having one can go a really long way, not just with lenders, but with like investors, grant programs, and also with FSA, the Farm Service Agency, who likes to see one as well. It shows you're serious and that your operation is viable. So hopefully today's overview will make a business plan more approachable. And for those who have already, created one before, hopefully it'll help you kind of sharpen your understanding and your skills. So let's dive into the business plan. So this is really your roadmap. It's your guide for making smart decisions. Without it, you risk just kind of floating around, reacting to opportunities instead of pursuing them with intention. So it helps clarify your goals. Say you're farming 40 acres of almonds. What's your long game? Do you want to focus solely on almonds and expand your acreage? Or do you want to diversify into other permanent crops? A business plan also pushes you to research market conditions before jumping into something new. And this kind of goes hand in hand with identifying risk. All too often we'll see farmers get offered, let's say, 20 acres of vineyard ground from a neighbor at a price that they just can't pass up. But before diving in, you've really got to ask, can you land a contract for that crop? Will the property cash flow the loan payments, or will it just become a financial drain? Or, if you want to farm something else on that ground, okay, well, do you have the funds or the financing to take on such a project? So really having the foresight to ask these questions is really key. So we're going to take a look at an example business plan. So when it comes to these business plans, I really think less is more in a lot of cases. There are many different formats out there. Some are full documents, others are more worksheet based. This is a one-page template that actually comes from a great new resource that we're a part of called agbizinfo.com. And we'll share more about that later. But no matter the format, your plan should really cover a few key things. So at the top here, we have mission. So what's your purpose? And you want to try and keep this simple. But the mission of this example, this pastured pork and poultry operation, was to basically maintain regenerative practices, community nourishment, and long-term land stewardship. And that mission kind of drives everything else in their plan. So from there, they've laid out 4 key objectives, things like developing processing and sales channels, diversifying into other products. And then each objective has what we call a SMART goal. And that stands for, goals that are specific, measurable, attainable, rewarding, and timed. And every SMART goal is backed by an actual action plan. And that's really, the nitty gritty, like how steps. So for example, under their sales objective, one goal is to launch direct-to-consumer sales channels. So their action plan includes, building a website with online ordering, setting up at local farmers markets, and offering CSA-style meat boxes. So this kind of planning, really keeps you focused and shows where the farm is headed. And it gives you the clarity to help guide like your day-to-day decisions. And I'll note as well that, you'll have access to this presentation after the fact if you'd like to kind of read through this example in a little more detail. I know it's a lot to digest in one slide. But we'll go ahead and move on and talk about a few tips to kind of help you get started with your business plan. So first off, I would say start with your why. So why does your farm exist? And maybe that's personal, like maybe you want to, quit your day job, farm full time, and support your family that way. Maybe it's legacy. Maybe, you're setting things up so your kids can farm after you. But once your why is clear, you can really set realistic goals and kind of break those into steps. And then secondly, know your market. So don't just focus on what you want to grow, but focus on what your market wants and what they'll pay for. So definitely, do your research, define your niche and pricing strategy before planting a single seed, so to speak. And then third, and arguably the most important, you have to run the numbers. So will this work? Is this venture sustainable? What risks are involved? And you'll find the answers to a lot of these questions when you start to build your budget, which we'll get into. But I just wanted to add before we move on, the resource at the bottom of the screen here is a great place to start. It's full of questions you can kind of ask yourself to help guide you through your business plan. So we'll move on though to next we have your budget. So this is where you start to answer the big question we just posed of, will my farm venture actually work? So a budget, of course, it tracks your income and expenses, but in farming, I think it's really more than that. Because agriculture is so seasonal, your budget kind of helps you spot shortfalls and plan ahead for lean months, big purchases, or even like unexpected repairs. It's also a decision-making tool. So, let's say you want to buy new equipment or try a new production method. Your budget kind of helps you see the financial impact of that before you commit to anything. And for lenders, it's huge. It shows your projected repayment ability. So, after expenses, is there enough left to cover your loan payments? And then on top of that, is there a buffer? So for YBS farmers specifically, this is especially important because you might not have a long track record or years of tax returns to show us your historical income for your operation. So, your budget really needs to be sound and realistic. So next we have a sample budget template. We also, interchangeably call this a projection or a cash flow projection. This one's broken down by month, which is super helpful for farms. It shows when cash is coming in, when it's going out, and when you might need to, say, lean on a line of credit to keep things running smoothly. So if we check out these arrows on the left here, we'll break it down into 3 sections. So we have your inflow, This is your income, so your crop sales, your livestock sales, maybe your government payments, and so on. Then below that, we have your outflow, and these are your expenses like your feed, your labor, your fuel, your repairs, basically everything it takes to keep the farm going. And if you wanted to, you can always break out overhead expenses into their own category if that's helpful. And that would be things like rent, utilities, insurance, and so on. You can see here kind of towards the middle of the screen, we're also accounting for living expenses in here. So, if your farm is your sole income source, you likely want to account for that in your budget. And then the third arrow shows our debt service. So this section basically tracks your loan payments. So that's helpful. You should include, your principal and interest in there. And then towards the bottom, you can kind of see, one of the last lines there, the excess or shortage kind of shows you throughout the year, what months might you be a little short, and what months you might have excess. And again, that's where a line of credit comes in. Let's say you're short at a certain season because you haven't received your income for your crop or product yet. That's where something like a line of credit comes in handy. So this is very helpful. This is a more simple budget template, but it's super helpful and adjustable. Now, when lenders look at this, one of the key things we're evaluating is your ability to cover debt using your operating profits. So in the bottom right corner, that's where you see the debt service ratio. And that's calculated down at the right. If we head to the next slide, though, we can break that down. So the debt service ratio is also called sometimes the EBIT to P plus I ratio. And this is basically your earnings before interest and taxes divided by your principal and interest. So a ratio of 1 means you're just breaking even. So your earnings are just enough to cover your debt payments. A ratio of 1.25 or higher is what we like to see. It means that you've got a cushion and can handle, say you have a dip in earnings or a spike in expenses. You can handle that without missing loan payments. So an example I can think of too is, let's say you have a ratio of 1.15. So that is positive, that's above 1, so that's always a good sign. But it does suggest, a slightly tighter margin and more risk, while something like 1.25 gives us more confidence in your financial stability. So let's just move into a couple of tips. So first off, I think it's really important to compare actuals to your projections. So, don't just make a budget and forget about it. That defeats the purpose. Definitely check in regularly. Did you meet your goals? Where are you overspending? And then secondly, I would suggest also using enterprise budgets, we call them. So basically break down your margins for each of your products. And this kind of helps you see, what parts of your business are profitable and maybe what might be dragging you down. So you can kind of make decisions to perhaps, increase production of your more profitable crops and maybe reevaluate your underperforming ones. And then third, and this is probably the most important, be realistic. So, your budget really reflects your credibility. Let's say a new almond grower gives me a budget projecting 35 pounds per acre yields at $2.75 per pound price with 3,000 an acre in expenses. That really raises red flags because it tells me, they might be overly optimistic and not really prepared to manage risk. Lastly, let's move on to your balance sheet. So think of this as the health check for your farm operation. It basically gives you a snapshot of what you own and what you owe at a specific point in time, helping you understand your overall financial position. And then also, comparing balance sheets year over year really helps you kind of monitor your progress and make more informed decisions. 2 key indicators that we look at are liquidity and solvency, which we'll define coming up shortly here. But from a lender's perspective, a strong balance sheet, strong capital position builds trust. It shows that you're running a stable, reliable operation, and that really goes a long way. So let's move into a practical example of what a farm balance sheet might look like. So if you see here, we start with assets on the left, and this is broken down into two categories. So assets, that's everything the farm owns. So we have current assets up above, and down below we have non-current or long-term assets. So current assets, that's your cash, your savings, your livestock ready for sale, your crop inventory, your accounts receivable. These are short-term and expected to be used or converted into cash within a year. While the long-term assets include things like machinery, breeding stock, real estate, and these are your long-term investments that support, the farm's operations over time. And then on the right, we have liabilities, which represents, what the farm owes. So again, up above, we have current liabilities, and that includes bills and loans due within the next year. And down below, we have your non-current or your long-term liabilities. And those are longer-term debts like equipment and real estate loans, things that are not going to be fully paid for within a year, typically. So when we subtract current liabilities from current assets, we get working capital. And this is a measure of liquidity and kind of tells us, whether the farm can meet short-term obligations and maintain their day-to-day operations. Strong liquidity means, you can handle surprises without like scrambling for emergency loans and so on. But when we subtract all liabilities from all assets, we get owner's equity. And this is a measure of your solvency and it reflects the net worth of your farm. So whether your total assets can cover all of your debts. So a solvent farm, is more resilient and better positioned for growth. So as your lender, if we move into the next slide, we focus on the ratios behind those dollar amounts to really assess your liquidity and your solvency. Because, ratios give us a more consistent way to evaluate different operations, regardless of size or commodity or location. So two of the most important ratios we focus on are your current ratio and your owner's equity percentage. Your current ratio, this measures your short-term financial health. So it is current assets divided by current liabilities. So a 1-to-1 ratio is the minimum threshold, meaning, you have just enough current assets to meet your current liabilities. Ideally, you want to aim for 1.25 to 1 or higher. That extra cushion just gives you a bit more breathing room when surprise expenses pop up. And then owner's equity percentage, this shows basically how much of your farm is financed by you versus debt. So it's your owner's equity or your net worth divided by total assets. So if this percentage is below 50%, it means you're more leveraged. And that's actually pretty common for YBS farmers and not necessarily a dead end. There are some precautions a lender could put into place to kind of mitigate any risk involved with lower owner's equity. But the higher your equity, the more borrowing power you have, the more independence you have. It, signals financial strength and kind of gives you a more control over your future. So these ratios together, help us understand your operation stability and kind of help guide conversations around lending, investment, and long-term planning. So a couple of tips for the balance sheet. So timing really matters, especially in farming. So where everything is seasonal. So to get the clearest picture of your operation, it's really best to prepare your balance sheet at the same time each year. So usually like right after harvest or at the end of December. And that way you're comparing apples to apples year over year at the same point in your production cycle. And then second, don't forget, we see this a lot, don't forget to include those accrual accounts. So for example, you may not have much cash on hand at a certain point in time, but you likely have other liquid assets that are easy to overlook, especially since they're not like as immediately visible or tangible as cash. So a few examples of those would be accounts receivable. So crops you've sold but haven't been paid for yet. Crop inventory. So crops you've harvested but haven't sold yet. And then cash invested in growing crops. So the money you've already spent on inputs like seed, fertilizer, for crops that are still in the ground and haven't been harvested. And then third, it's really tempting to mix your personal and your farm finances, especially when you're just starting out. But doing so can kind of muddy your balance sheet and make it hard to track your farm's true financial health. So try and keep those separate. And clean records really, they don't just help you make better decisions. They also, build credibility with lenders, grant programs, and so on. And again, it shows, that you're serious about your farm and that you truly are running it like a business. So I hope, you picked up some helpful insights from this information today. We will jump into some Q&A in just a bit, but also, if you'd like to talk directly with a lender, please feel free to reach out to us at American Ag Credit. We're always happy to help. And with that, I'll hand it over to my colleague, Jason Runyon, who's going to share a little more about an exciting new resource that American Ag Credit is proud to be a part of.
All right. Well, thank you very, very much, Nicolette, and very, very interesting conversation and good information about how knowing your financials and knowing the numbers behind your operation and sort of what we look at from a lender's perspective to kind of tie it all together. So thank you again for that. Hello, everybody. My name is Jason Runyon again, and as Jacob had mentioned at the start of the presentation today, I'm the Mission Programs Manager for American Ag Credit. And so, again, part of what my responsibilities are is to advocate for our YBS program, and not only our special lending programs and our loan products, but also sort of the value add services that we can provide you as the YBS customer, which is what we're going to talk about here today, is a new recently rolled out partnership that we have with other farm credit associations within the system on a YBS platform called AgBizInfo. So really from a 30,000 foot view, what it is, AgBizInfo is a free online tool that is packed full of all the educational and business resources that are specifically designed for young, beginning, and small producers. I don't know about y'all, but when I first got started in my personal ag operation, a lot of the information, and it was even before I started with the farm credit system, but a lot of the information that I was receiving was just going right over my head. Wasn't really designed for young and beginning producers. So what I like about the farm credit system is that we are regulatory required to provide special lending services that is specifically designed to young, beginning, and small producers. And that's exactly what this tool is designed to do, is to bring those resources from about 28 different farm credit associations within the system, all into one user-friendly platform that you, as the customers, can tap into and get whatever information that you might be needing, and educational material and resources like that. And essentially, why we're doing this is, like I said a second ago, not only is it regulatory required, but American Ag Credit, we've always taken the stance that we are, and we continue to be, and will always continue to be, proud supporters of the next generation of producers. And American AgBizInfo is really just one of those tools, additional tools that we can offer to support you as the YBS producers. It's really a value add product in addition to our specialized financing options. So again, if you want to talk to a lender about any kind of the loan options, give the Nicolettes of American Ag Credit a call, and they can discuss any programs that we have. But if you're needing some information, or if you want to just get some additional resources and educational material, feel free to join on this platform. And if you go to the next slide, I'll kind of point out sort of how we get there and what it is. So this, on the left-hand side of the screen here, is really a snippet of the homepage of the platform. And information is provided in 6 key main areas: infrastructure, marketing, business planning, farm management, financing, and estate and transition planning. What I like about this platform, and one of the reasons why we're really excited to partner on it, is that it's not just a curriculum-based platform. You don't have to sit there hours on end and go through, step 1, step 2, step 3. If you're having an issue with, your balance sheet, for example, you can get on here under the financing section and find whatever you need and hopefully get whatever questions you're looking for. But it also provides content in different formats. So if you're one of those type of people that likes to read, for example, then they have articles that are readily available for you. If you're a type of person who spends a lot of time in the cab of a tractor and you want to listen to a podcast about how to put a cash flow together, that is something that is available. Or if you're somebody who's working through, as Nicolette was going through at the end of her presentation, if you're working through how to put a balance sheet together and you just need to watch a video of how that is done firsthand, then resources like that are available as well. But in addition to the educational materials that this provides, this also provides additional tools and resources. Like if for example, if you're at the beginning stages of your operation and you want to maybe look into requesting some financing from American Ag Credit or any farm credit institution for that matter, then you can get on here and look at a resource like a loan calculator, and it'll kind of give you just a basic breakdown of how that's going to look. If you're one of those individuals who selected no, or if you selected I don't know what that is on the questionnaire earlier in the presentation, and you're needing financial worksheets, then those templates are readily available on this website. All you have to do is navigate down to this additional resources section in light green on the side content bar there. If you're on here and if you like to, and like I said, it's a crowdsourced platform. So if you find that there's a association out there that's providing content that you really like and you want to continue to explore what they have, then you can filter, like I said, by content format, and you can also filter by contributor. You can see on there that there's a lot of partnering organizations on the platform that are all farm credit associations or associated within the farm credit system. So again, being regulatory required, all of our YBS programs at the end of the day sort of look the same. So if you have a additional need for those kind of resources, then please feel free to hop on here. Or if you're just new to farm credit in general, then at the top of the homepage there, you can get some additional resources just about the farm credit system. You look at the partners on this platform. You can even try to find maybe if there's some events that are listed on the calendar of within your location. Or if you want to talk to your local lender and you don't really know who that is, you can utilize the Find Your Lender function, and it's based off of zip code, so it'll be able to tell you, who your local farm credit service provider is. If you go to the next slide, please, Jill. So we've tried to make this almost as painless as possible as how we can help you navigate to utilizing this resource. And it's pretty simple. If you go to our website, www.agloan.com, and you navigate to the financing page and our YBS page within our financing subpage, then go one more slide if you don't mind. You can scroll down to our educational section of that YBS page and click on that learn more button to build your financial and business expertise section, and that'll take you directly to the platform, and you can begin your search for whatever kind of information that you're looking for to help your operations continue to grow and to continue to succeed. So with that, I'll hand it back over to Jacob, and he'll take it from there.
Awesome. Well, thanks, Jason and Nicolette. I really appreciate your practical tips and resources. This subject, can be very dense, but I think you both did a great job of unpacking it in a very easy to understand manner. And I myself definitely learned something. For those on the line, now is our time for Q&A. Go ahead and submit those in the Q&A feature at the bottom of the chat, and we'll go through them. I would really encourage you to do so. We have plenty of time left today, and you have a live resource that is eager to answer those questions. So feel free to submit those in the Q&A, and I will be on the lookout. We did have one come through, and I think this one will probably funnel to Nicolette. Going back to the discussion of budget, when you're looking at your expense line, Obviously, we don't have a crystal ball for what those expenses are going to be, and each operation, each commodity is going to be different. Nicolette, what kind of resources do you recommend in dialing in those expenses to be as accurate and smart as possible? I think you touched on this a bit, but you might expand on that.
Yeah, no, that's a great question. So one that we recommend quite a bit are the UC Davis cost studies, which you can find if you just Google UC Davis cost studies. They do a report for every major crop, and they typically update them every few years because we know that expenses fluctuate throughout time. But it's really helpful. It helps you, if you're doing more of a permanent crop versus like an annual crop, it breaks down all of the development costs as well as the operating costs for that crop once it is a mature orchard or planting. And then of course there's cost studies for, again, your annual crops, so more of your row crops and so forth. That's a really helpful resource. I'd also say probably, talking to farmers in your area, a lot of farmers, if they're experienced, should be able to tell you like, hey, it costs me X amount per acre to farm my corn. And that's helpful as well. So you can kind of get a guide into that as well. I think those are probably the two more important resources.
That's great. How about on the income end of a budget? So, same thing. We don't exactly know what commodities are going to be priced at when you harvest them, but what is the best way to build a smart income assumption?
Yeah, that's a good question. And I would say when you're projecting revenue for a crop, there's really, two key factors there. There's price and yield. So for yield, let's say you've been farming the crop for a few years, you want to use an average of your own yields and your projection and your budget. It's best to use, I would say, like a 3 to 5 year average to kind of help offset any outlier years, due to like a weather event. But if you're new to the crop and you don't have your own historical data, there are several reliable sources you can reference that will publish average yield and pricing data for the most recent year, and then stretching back to many years prior. Some of those include like the USDA, so they post national and state level yield averages. Every crop usually has a board or an association that supports growers. So I'll use almonds again as an example, but we have the California Almond Board. You can also look at like county crop reports for more localized data. And then also, at American Ag Credit, we have a great resource you may have heard of called Terrain. And it's basically like our team of economists who provide, market insights and commodity trends. So if you go to our website, you can access Terrain, sign up for those reports. And again, for the yields, use an average. For price projections, you might use current market prices for your short-term projection. And if you are putting together more of a long-term projection, you maybe want to use more like a 10-year average of what you're seeing in these resources to kind of account for, market fluctuations throughout time and provide a more stable outlook, if that makes sense.
It does. So what you're saying is I shouldn't look around to the 5 highest production orchards around me to build my own personal yield forecast. That's probably not a good idea.
Correct. Be realistic.
All right. A time to be optimistic and a time to be realistic.
Exactly.
The next question that came in is still around budget. We must be on a theme. So Nicolette, you might answer this one. Do you have favorite tools or templates for constructing a pretty straightforward farm budget, especially for small or diversified farms? And how about cash flow? I think that might be something that AgBiz Info can help out with those templates, but maybe you have some additional tips there.
Yeah, so AgBiz Info has that template that I shared, which is a great one, and you can add in multiple crops. It's very editable, so you can add in any expense you want. I'll also say AgBiz Info also has, I mentioned at some point, an enterprise budget, which breaks down like what is your budget for each crop, so you can kind of look at it on its own basis and assess if that crop is profitable. AgBiz Info has a template for that as well. And then we at American Ag Credit have a few different budget templates for what we call like a multi-year budget. So again, let's say you're planting like a permanent crop, like let's say walnuts. A lot of folks want to look at, okay, what is this going to cost me year 1 through 5? before I'm actually producing a crop. And we have templates for that internally that we'd be happy to share if you ever wanted to reach out directly to us.
Awesome. Still have some time for Q&A. So if you have additional ones, please go ahead and submit those to the Q&A feature. I will remind that this webinar recording will be shared sometime this week to all registrants. So even if you have friends who aren't able to join us, they'll receive it via email. All right. Going once, going multiple times. Well, thank you again, Jason and Nicolette. I found this to be a very practical and helpful discussion for any of those who have joined us. If you have any additional questions, we are here as a resource specifically to support young, beginning, and small scale farmers. Feel free to submit a question via agloan.com, or we'll be sharing our contact information directly to those who register. But thank you for joining us today, and have a great rest of your day.